Hi, good afternoon, everyone. Welcome for today's session. Yeah, just a minute. Okay, guys, welcome for today session. So all of you aware that our session is going to be pertaining for domain analytics, right? So yeah. So let me share the screen now. So before that, let me share the screen first. Okay, guys. So welcome for today's session. Once again, I'm welcoming everyone for today's session. So yeah. So what is this presentation? It's getting yeah. It's getting my close of the application is process. Just a minute, guys. It's getting processed now. Okay, fine. Okay, fine. Let me share the screen now. Okay, guys. I'm just looking for some pen, Epic pen, but it's not getting on. Okay, let me resolve the issue later, point of time. Sorry to interrupt that. So now quickly we can start the session. Okay, so without wasting time, yes, let us proceed to the session. So guys, so yeah, so all of you know that we are continuing for domain analytics, right? We are working for domain analytics program. So in the previous session, I mean the previous the duration of time or the previous last month or before month, I started with sales analytics. And we discussed about oceanography analytics. And we discussed about e-commerce analytics. This is 8-hour session. This is 8-hour session, and e-commerce analytics was 16-hour session. So continuation of this analytics program. So now we are looking for trade analytics program. Trade analytics program. So this is pertaining to 16-hour program. So each day we are going to spend almost 1.5 hours. Okay, so every day we are going to spend almost 1.5 hours training program. So maybe it's around 11 days of program. It can be. So in domain analytics program, we are going to deal with some different algorithms. We have different, we are just going to take different use cases as well as different algorithm. We are going to work on it. Okay, the first thing today is we are going to talk about, let me talk about the agenda of the current program. Okay, so the overall agenda would be, just a minute. Let me create new slide. Okay. So I will take the second slide to write blank. Okay, fine. So our overall agenda for this session, for this program is, let me delete this. So the overall program should be like this. The first day we are going to talk about application of machine learning. Let me clear all. The first day, day one, we are talking about application of machine learning in trade analytics domain. Second day, we talk about CRISP MLQ. Day three, we will talk about data pre-processing and EDA process. Data pre-processing and EDA process. Day four, we will talk about one use cases for k-means clustering. Okay, k-means clustering on trade analytics or some data, some use cases. And fifth day, we talk about KNN neighbor algorithm. And sixth day, we are going to talk about decision tree. And seventh day, we have a linear regression algorithm by using some use cases. And eighth day, we are going to talk about MLP, multi-layer perceptron neural network concept. And ninth day, we are going to talk about text mining. And 10th day, again, we are taking some other algorithm, something we can extend for one algorithm in different use cases. So these are forecasting. We can take 10th day as a time series forecasting. So this is what our plan. So we make sure that we will be cover up. Okay, so we will be cover up all the algorithm. Okay, so this is what our complete agenda of this domain analytics program. Let me clear all these things. So yeah, today analytics. So today we are going to talk about introduction to domain analytics, introduction to trade analytics, Just a minute, guys. There is some again, there is some problem. I think it got struck. Yeah. Sorry, guys, it's keep fluctuation now. I don't know what is the problem today. So yeah, so let me share the screen. So we will fix the issue soon. Don't worry about it. Due to the technical issue, I'm not able to continue this properly. Okay. So today, this is what our agenda of that. So introduction to domain analytics and introduction to trade analytics. Then we are going to talk about machine learning application on trade analytics. So this is what today I'm going to see. And ultimately, we are going to see challenges in trade analytics. So that is what we are going to see today. So without wasting time, let's go for domain introduction of domain analytics. So first of all, what is analytics, guys? What is analytics? First of all, what is analytics? Everyone, anyone? So we can say that analytics is we are analyzing the data. Okay, so we are analyzing the data without wasting it. Okay, so actually the data analytics is nothing but it is a process of analyzing the data to get a meaningful insight. Analyzing the data. Okay, so we are analyzing the data to get a meaningful insight about it. So for that, we are using various techniques, various statistics. Okay, to analyze the data. To analyze the data, we used various techniques and various statistic method to get a meaningful insight. Right. For that, what we do in the data analytics. So we are collecting the data. We are collecting the past data, and we perform some analyzing method or some tool or some technology. Okay, from that we are find meaningful insight. The best thing is hidden meaningful insight or hidden meaningful pattern. That is called data analytics. Then what could be domain analytics? In domain analytics, we are performing analysis on particular domain. So we are analyzing the data related to some software. Okay, on particular specific field. So we have various field, right? So just we proudly announce that in 360DigiTMG, So we are launching more than 56 program, the domain analytics program, for betterment of the participants who are enrolling for in 360DigiTMG. Got it, guys? So the data analytics is an evaluation trend that has been continuing for more than 100 years. So when the technology is getting, so when technologies keep increasing, the data is the access of data is keep increasing. So that is a logic, right? So when you are, because before 15 years, if you look back, there is no abundant data. We're not getting the abundant data on it. But when in recent days, by the improvement of technology, yes, there are many data, the abundant data getting generated, and it used for the companies taking advantage from the data. So every company, they're taking data, they advantage from the data. They take advantage from the data. So that is what in the recent days we have observed. So the domain analytics will provide you with the insight regarding the user. Okay, so it provides the regarding user from different domain. Okay. Yeah. So here, this type of data analytics provide insight business and make effective decisions. So why do we do that? First of all, why do we do analytics? Why do we do analysis? Because we are make use of the data is measurable. All of us know data is measurable. Correct. So then what we do? We are measurable. That means we are analyzing the data. Why do we measure? By measurable in the sense we are applying some statistical or mathematical formulas. By that we used to get, we're getting analysis. So by doing analysis, why do we do analysis? Because we are build a model. So it kind of things, guys. Look at this. I would say we used data is measurable. Okay, chain data is measurable. Then we can do it for analysis. Data is for analysis. We're using for analysis. By using analysis data, we can use for data model building. See, once we build the model, then we can predict the data, predict the future. So after predict the futures, we can take optimization solution. Optimized solution. So there are multiple solutions we can able to get, but please make sure that we need to get some optimum solution, the appropriate solution. From the optimized solutions, we can take decision on it. The company or management will take decision. Okay, so what we mentioned here, the creation of human knowledge and data has been occurring since invention of movable type from the 16th century. So this is just history of data. No need to much concentration on this. So ultimately, what we are going to do by domain analytics, we are applying our machine learning on particular domain to get a meaningful insight. So as we discussed, by using this insight, we are doing analysis. That analysis we can take model building. So once we do analysis, we will, based on that, we will build the model and we predict the future data. Then we optimize the data, optimize solutions. Then it can be for take a decision on it. So before we go to the trade analytics, let me quickly introduce about some 4 stages of analytics. Okay, some 4 stages of analytics. So the 4 stages is descriptive analytics, diagnostic analytics, predictive analytics, prescriptive analytics. These are the 4 stages. So what we do in the each stages, guys, everything is a interlinked, step by step. So we cannot move from 1 to 4th step. We cannot go that way. So every business or every process, if you are performing analytics or analysis, you should follow indirectly or directly to this data. So descriptive analytics will talk about what happened or what is happening from past to present. So when you talk about descriptive analytics, we will look into that what happened and what is going on. For example, when it comes to trade analytics, we can correlate with the example with trade analytics. Because since we are going to do the trade domain, we can have a quick comparison with trade analytics. So when you say it's a descriptive analytics, we are comparing the data. Okay, so we are just looking what is happening in the previous past data. In trade market, which company share is high value? Or what is happening current market? Correct. So now what is happening? What is the losses for which company trade or which company stock is getting affected? Correct. So multiple things we are just thinking about. This is summarization part. We will say, is this summarization part? We are summarizing the data. So we collect the data. So we collect the data from the sources. So once we get collection of the data, then we can understand what is happening or what is going on around the business. Which share market is declined, which company stock is declined. So various things we will be talking about in this descriptive analytics. The next term, diagnostic analytics. What is diagnostic analytics? So the diagnostic analytic is a second step. So this will help to find the root causes of the problem. Reason for that. Okay, what is the reason for the issue? Okay. So what is the reason behind that? Okay, why the sudden increase of the stock price for particular products or particular company? Correct. So what is the trend of the analysis? What is the particular company trend? Whether it is keep the stock prices keep increasing or it is keep decreasing. So multiple things we are going to discuss about it. So in trading, in diagnostic analytics, the main focus was, again, I'm just repeating this. So in diagnostic analytics, we are trying to understand the reason for particular event. The reason for particular event to conduct or the reason for sudden changes. It can be positive changes or it can be negative changes, irrespective of this. So always we should not rely on positive changes. We should not rely on negative changes also. So that will talk about diagnostic analytics. When come to the third topic is predictive analytics. Predictive analytics. So this is the third stages of trade analytics or sorry, data analytics. Okay. So yeah. So predictive analytics, it's used for predict model building or predictive modeling. It's used called predictive modeling. So past two, the remaining two was the before two was descriptive diagnostic will be mainly focused on past to present. But these two will focus on future data. It's future, what is going to happen? See, if the same trend is continuing, what will be the future data? So that's what we are going to predict on it. Okay. So predictive, for example, when you are looking for a share value or the stock value, if the same, so based on descriptive diagnostic, we come up with some observation. That observation told me that certain companies' share is keep decreasing. Certain value is keep decreasing. The values keep decreasing. What if the same trend continues? What if the same trend continues? So that is what we can use predictive analytics to predict the future data. And the fourth step, we have a prescriptive analytics. So as I mentioned, these two are talk about past value. These two will talk about the future data. Future data means predictive. We are going to predict and your prescriptive analytics will tell us what needs to be done. Solution stage. Let's talk about solution stage. What needs to be done? So any analysis we do for any domain you take, irrespective of domain, you have to perform these 4 stages of analytics directly or indirectly. Got it now? Okay. So what we look at in this stage, so yes, we come across the 4 stages of analytics: descriptive, diagnostic, predictive, and prescriptive. So can you summarize? Shall we summarize now again? So we descriptive analytics will talk about what happened or what is happening. So what happened from past to present. Diagnostic analytics will talk about what is the root causes of problem. What is the root cause of problem? Predictive analytics will talk about future data. What will happen? What will happen? Future data. Prescriptive analytics will talk about what needs to be done. So we'll be clear all. So what needs to be done? So this will talk about the 4 stages of analytics. Okay, so next agenda is introduction to the trade. So before getting to the introduction to the trade analytics, let us look at about what is trade or what is stock. See, here we used to have a definition for the stock or share or trade. Trade means nothing but buying and selling. So in financial product, we have different kind of trade: import trade, financial trade, export trade. There are multiple trades. So here we are looking for financial trade. That means stock. So the stock is generally we used to describe as the ownership certification of any company. A share, on the other hand. So it refers to the stock certificate of particular company. holding a particular company share market as a shareholder. So stocks are two types, common and preferred. So difference is while holder for the firm voting that it can be considered as a formal stock. So stock also in other name we can call as equity. The stock is other name we can call as equity. It's a security. There are different names we have a trade, stock market, share market, stock, equity, and multiple things. So it's security. The stock is also known as equity, and it is security that is a security represent the ownership. It represents the ownership of fraction of issuing corporations. So asset. Stocks is an asset. So stock is a form of security, nothing but no need to be confused. See, a stock is a form of security. Stock is form of security that indicate the holder, the person who are taking the stock, and proportionate ownership, giving a ownership by issuing corporation. The corporation issues stock to raise fund to operate their business. So the main thing is common and there are two main type of stock is common and preferred. So it may be deal with some little terminology guess. So please bear with me because since we are working on domain analytics, we are forced to use some technical terms so that we can understand in further context. So the understanding stock. So what is that? By using understanding the stock, the corporation issues stocks to raise fund to operate the business. So every company and the holder of the stock, every company or holder of stock, what they do is they're selling their stock, giving the ownership as getting divided to common people. But in between that, we should understand the difference between the stock and bond. That is, you might be heard about stocks and bond also, right? So we need to understand this before getting to the topic. We need to understand some difference between the stocks and bonds. Yeah, so just getting hang on again. Let me keep exam straight now. Yeah, there is a fluctuation again. I'm seeing fluctuation over here. Sorry guys, just a minute. It is getting load on. Sorry guys, again there is the interpretation. So it is very unfortunate that just keep fluctuation. I didn't expect that. Okay, anyway, we will carry on this about, okay. Carry on about this. Okay, so sorry guys, there is the continuous interpretations for us today. Yeah. Okay, fine. Yeah. So we will be come up with some different share analytics. So right, we discussed about stock and share. There is a difference between the stock and bond. So stocks are issued by the companies to raise the capital. Stocks are nothing but stocks are let me write it here. So stocks are nothing but the stocks are issued by the companies, issued by companies to raise the capital to grow the business. Okay, so there are important distinctions between the whether somebody buys share directly from the company when it is issued them in the primary market or from other shareholder for another shareholder in the secondary market. In the secondary market. So when the corporation issues the shares, it doesn't in return for the money. But the bond is vary from the stocks in several ways. The bonds are getting varied from the several ways. For example, the bond holders, you can say it's a bond holders are creditor to the corporation or they are creditors to the corporation and they are entitled to the interest as well as repayment of principal which is invested. Okay, then how can we earn income from the owning stock? There are two ways. So there are two ways they can to earn money by owning share of the stocks. It's through by dividends and capital appreciation. So these are the things, some of the input about in trade or share market. These are some basic informations. Yes, many of them might not aware of it. What is the share and what is the stock? Correct. So when we learn in deep in this domain analytics, this is necessary to understand that. So nothing but very simple way. I'm again explaining you very simple way. So stock is nothing but it's a type of investment that represent the ownership share of the company. That's all. It can be a company. Okay. So how the stock work? Yes, the public company, any public company sell their stock. Public company will sell their stock through stock market exchange, like New York Stock Exchange. So one of the famous one and SEBI. Correct. So why do we do that investing money? Investing money is talk to way to grow your money. Because if you are keep it in the savings, you will get less interest rate. But if you are investing wisely in any of the companies, so there is a more chance it is doubling or exponentially the money will get growing on it. So when you are the shareholder, You can make money when the stock price is rising. You may earn dividend. Okay, when the company distribute the earnings, you will get your dividends. So what we need to, how to make these things, what is the basic, the algorithm behind that, not algorithm, I would say basic logic things. If the price of the stock is increasing, the price of stock is increasing during the time you own it, you sell it more than you paid for it. Because you might be purchased a stock for 100 rupees. But when the value is increasing, you used to get 500 or 1000 or even 2000, 3000, it's keep increasing this. And trader, we have a different thing, trader and investor. What is the difference between trader and investor? Let me talk about trader. So traders are, they buy and sell to get short-term profit within 1 day or within short period. Okay, so traders are buy and sell stock to the get short-term profit. But investor buy and hold stock and usually do better long-term investment. They do it for long-term investment, I would say. So it is a long-term investment. For this, what about this? Okay, so when this is what about some the thought about uh, yeah, trade analytics. Now let us look at the other side of applications. So we talk about introduction to analytics, data analytics. So the introduction to domain analytics. So data analytics is the evaluation trend that is continuing for 100 of years, as we discussed about it. So trade analytics is the part of big data, because when you are taking trade data sets or the share market data set, it is huge data, it is a big data. See, all of us know what is big data. We have discussed in data types. So big data contain, there are 4 V's. 4 V's, right? Volume and velocity, veracity and variety. So this share market data should be belong to these 3. These 3 all are fulfill the characteristic of big data. For example, when you take share market, so how many share market, how many companies are there, how many share they have. So every data getting huge volume. So the data is getting huge volume of it. And velocity. Velocity will talk about the speed, rapid speed of the data generation. Rapid data generators keep generating rapidly. So we have a sentiment analysis. Sentiment analysis, we talk about it. You talk about that. How the customers having opinion about some particular product or services. They commenting or they reviews their particular reviews on some particular public forum, some open sources. There is a chance they have given their opinions or expressions towards the product or services. So what is the plan of big data? The big data is to collect the process and information related to specific market and need to create proper understanding of the sentiment that drive customers. So various trading strategies to valuation of the every single reliability. So there are multiple options we have with this. So in applications, okay, so there is a trading analytics applications can be pre-trade decision making. What is pre-trade decision making? We will talk about at a moment. So pre-trade decision making by using machine learning. They have been predicting stock price. In upfront, we are predicting stock price. Okay, so what is that here? What we can see here is the stock market is now also known for being volatile, right, and dynamic and non-linear. So the stock market, we all know that it can be a volatile. Volatile means keep changing, and dynamic. Dynamic also keep changing, and non-linear. Non-linear means there is no pattern at all. So that's what the accurate stock price prediction is extremely challenging because of some macro and minimum micro factors, just politics. Yeah, there are many reasons, right? If you want to see suddenly the sales, the stock price is increasing, suddenly it get decreased, suddenly increasing. The reason is volatile. So stock market is being for volatile and dynamic and non-linear. So it's extremely challenging because of some politics. Suppose in case if certain countries, if the rule party, the party is changed, the rule government is changed, then ultimately it's going to impact the share market price. Why do we do that? Because the company policy. See, if one ruler party, the political party come to stage, okay, so they come to the rule party, then they will change the policy guidelines in towards the tree. So global, so politics, such as politics and global economic, yes, because we are always the money is estimated by the dollar, American dollar, US dollar, all of us know. So some global economic conditions, how other countries, how is export and import happening between the India and other countries, and unexpected event. For example, unexpected event, I would say Corona, COVID situation. Right. So the COVID situation is unexpected event that completely affect the stock market in all over the world. So in stock analysis, we have two types. One is called stock fundamental versus technical analysis. We have a fundamental versus technical analysis. So usually the stock price is going to be a time series data. So for that, in our time series data, we discussed about, we are using moving average technique. Moving average technique in the sense it will be volatile situation. So whenever your data is volatile situation, we need to use moving average technique. Or we have LSTM model, stock prices LSTM model. LSTM technique, which is for neural network. We have application of AI also. So the AI application also will be play a vital role to predict the future price in the share market, in the trade. So what is fundamental analysis? See, when we are evaluating the company stock by examining its instinct value, including but not limited to the tangible asset, financial statement, management effectiveness, strategic initiatives, consumer behavior, etc. So being relevant indicator factors for a long-term investment, the fundamental analysis is mainly relies on both historical and present data. Okay, so the fundamental data or analysis is relies on both historical and current data to measure the revenues or asset, cost, liability, and so on. These are the some terms you should understand that, and you have technical analysis. So technical analysis will focus on historical data and current data. It's like kind of fundamental analysis, but it is mainly focused on short-term trading purpose. The technical short-term trading focused on this. So some of the popular technique analysis, I would say, see, whatever we know is moving average, right? In time series focus in data, if we, the person who are just following data science, you maybe understand this technical analysis, short time, and moving average. Moving average is one of the technical analysis perspective. Support and resistance level, as well as trend line and channels. So these are the different component which involved in this. See, when the time series data, since despite the volatility, stock price will not just recommend generate control. So we need to analyze the sequence of discrete time. We need to analyze sequence of the discrete time data. So the moving average is a popular method to smooth the random movement in the stock market. So similar to sliding window we discussed. We know that, right? Those who are studying data science, yes, you might be familiar with that, the sliding window. So the choosing of sliding window prop, it's appropriate. Then we have another method called LSTM, long short term memory. LSTM means long short term memory. Long short term memory. So these are another extremely the popular technique, which is used for powerful algorithm for time series data. It captures the historical trend pattern and predict future with a high accuracy. LSTM. The main nutshell of the component to understand LSTM is cell state, which represent the internal short-term and long-term memories of the cell. So cell state is the key factor over here. So this is about pre-trading decision making. Pre-trade decision making. Got it now, all of you understand? And there are different other things. Transaction cost analysis, high frequency trading, sentiment analysis. Correct, sentiment analysis. And we have different applications. Apart from that, we have a different application. So as we discussed currently, there are no aspect of our life has remained untouched by artificial intelligence. So in every part, the artificial intelligence and machine learning has been gone through it. Yeah. So when you have a machine learning for algorithmic trading, so the machine learning algorithms are extremely helpful in optimizing the decision making problem that we discussed about. So, we have a trade execution algorithms application. So what it is, this split the data or split the traders into small orders so that can impact on the stock price. So commonly used algorithms are volume weighted average price. We have two things, this volume average price, VWAP, and time weighted average price, volume and time weighted average price, and percent of value, POV, percent of value, POV. So these are the some different application of it. And we have strategy implementation algorithms. That means they execute the trader based on signals they receive from the real-time market data. And we have arbitrage opportunities. High frequency trading. We talk about what is high frequency trading. High frequency trading, in the sense, it refers to the complicated algorithm trading. Okay, talk about complicated high frequency HTFT. It is a complicated, I would say complicated algorithmic trading, which involves execution of large order within a fraction of second. So it executes the large order within a fraction of second. So this will be executing beyond our human level. To execute the numerous order within this short time, it is beyond the capacity of human being. So what the traders are usual thing is, they use algorithm and computers to automate the execution of orders, because it requires significant time to read the market trend and place bits manually. Correct. See, we have a number of data. How, as a human being, how can we do sit on time within? How can we respond within a fraction of second? So we just take automation with the AI. Every day. So in frequency trading also, machine learning algorithm and feature creation methodology are applying here. The most common method is SVM, support vector machine. Support vector machine. So the SVM work by creating line separation, so that we can identify the future that reflect an approaching, increasing or decreasing to the market price. Yeah, certain line. All of us are aware that support vector machine. I think that people who are studied data science, we have a support vector machine. This is for non-linear data. What is linear data? We understood, right? There is a relationship between the two variables, linear. Linear is separated. But when come to the trade data or the stock market data, it is not reliable. It's not linear, correct? It's not going to be linear. So we need to capture the pattern by SVM. So SVM, we have a maximum margin plane, hyperplane. We used hyperplane for the SVM technique. Maximum marginal error or maximum margin hyperplane. So that will separate the data, two classes, whether the price is increasing or decreasing. So that needs to be remembered when come to the high frequency trading. And another point, sentiment analysis. There are numerous factors which affect the stock market, including sentiment of people. Yes. See, in e-commerce website, we discussed right in the previous the domain analytics program. In e-commerce website, we discussed about one of the topic of sentiment analytics. So numerous factors which affect the stock market, including sentiment of people. So really the sentiment play a vital role or crucial role in the stock market movement, because market trend change rapidly, right? The sentiment of people. So the companies are now using machine learning and artificial intelligence to analyze the sentiment of people and predict the price of stocks. So based on their sentiment. How can we capture the sentiment base? Which is the right platform to capture the sentiment? Social media, exactly. Social media is one of the potent tools for sentiment analysis, because people express their, nowadays people want to express their own view in a straightforward. See, in previously we don't have a platform to express our concern towards the product or services, but thanks to the technology, thanks to the Geo, because after Geo invading only,
we are getting most of the people are adapted to the mobile. They are having mobile with them. Okay. And the sentiment analysis mainly carried out by NLP process, natural language processing. So this will helps to categorize the sentiment of people about stock value of particular company. So it can be, how can we do that? How can we categorize this? We can categorize it by positive sentiment, negative sentiment, and neutral. Positive, negative, and neutral. So positive means yes, it's a towards the positive feedback towards the product or company. Okay, negative means absolutely we know those. We are talking about some negative things on the particular company or service. Then we have a neutral. So if at all any optimist feeling about the company among the people, the stock price is going to be up.
Correct. This is logic, right? So whenever people are talking about the company in a good manner, the stock price is going to be grow up. Pessimistic sentiment. That means it will wrong or negative sentiment will make the people or make the stock reducing the price.
So especially for tweets, some post in the Facebook or YouTube. Okay, so that is what about things. And we can help to, and another application is it will help to assessing the risk. Okay, the machine learning the another algorithm application is to assessing the risks. This is to assess the risk. Let me write it down. To assessing the risk. Okay, so the trader might be the person who are having trade. He may be interested in the forecasting of future value, correct? So to find the predicted value of stocks, machine learning have account for some multiple factors. So what is the, yes, we use some neural network leverage to detect the factors. So accurately accessing this is a crucial part to be a successful trading. So there is another application was use of chatbot. So machine learning and artificial intelligence are the revolutionary technique. All of us know that. So chatbot is another good invention. It's a best invention by AI and combination of machine learning. So the chatbot is communicate with the traders and present them with the history of financial statement. So it used to present some information, guys, historical information. For example, a trader, he can ask the question to the chatbot about trading offers. So it will not only update him, but also the current price, but also provide information about potential offer of buy stock. And also we have another application is robo advisors for automated advising. So the deployment of robo advisor is gaining momentum in every industry nowadays. In trading domains, investor can leverage robo advisors to create adaptable portfolio of investment and execute the trade in different market of the world. Okay, so this algorithm enables the traders or investor to make accurate decision in different circumstances. There are multiple companies using machine learning for trading. Some of the very famous companies, Morgan Stanley,
is getting